Hi, I'm Aaron Shu. I'm our Director of Data Science here at acres.com. Been here for almost 2 years now. Before coming to Acres, I was a professor of agricultural economics and did a lot of work with geospatial data. So now I run our data science team, and I'm really excited to talk with everyone today about our new Heartland report, which is a farmland values analysis we just conducted. And joining me today is going to be Ben Maddox, our VP of Business Development. Ben, you want to give a quick introduction for yourself?
Sure. Thanks, Aaron. Ben Maddox, VP of Business Development at Acres. My background is in farmland real estate. So I'm a licensed broker in the state of Arkansas, as well as an accredited farm manager with the American Society of Farm Managers and Rural Appraisers. So glad to be here, Aaron. Excited about the Heartland report. And I think we have quite a bit to get into today.
Absolutely. Yeah, so I think the big question is why a Heartland report? What makes us different? What sets it apart? Why did we make this thing? And so from my perspective on the data science team, this is a really fun and fascinating project because most of the reports I've read on land values historically have been primarily based on survey data. So survey data is useful. It's often the only thing available, but it's really exciting to release a report based purely on actual observed transactions over a multi-year period. So from my perspective, that's what I'm most excited about in this report is that we can look at these regional trends and price on a productivity basis and understand the trajectory of farmland values over time. I'd like to hear your thoughts too from your background in investing in farmland and your current role is in business development, working with lots of folks in that space. What value do you see the Heartland report bring to the table?
Yeah, sure. So I think, the first thing on the top of everyone's mind is where are land values going, right? So it's been an incredible couple of years, great gains in the farmland market in general. But the most important thing to remember is that the farmland story is different throughout the entire United States. So you can't really compare what's happening in Iowa to what might be happening in California in sort of an apples to apples comparison. So we need to take care to break out these subregions and really evaluate what is driving value in each one of these places that's unique to that place. And so why I'm excited about the Heartland report is that, this is our look at what might be called kind of the Corn Belt, the I states plus a few more, really that center of the United States. But what I'm excited about is that we're not stopping there. So the other reports coming down the line, we'll get a look at a few other regions in the United States over time. But this is our first focus on this particular area. And I think what's also exciting about it, Aaron, is the sheer number of transactions that are involved in this report that's coming out. Maybe you speak a little bit to the number of data points we have involved.
Yeah, so we included over 37,000 unique farmland transactions in this report. So those are spread, across the quarters included. So we began in 2020 and came all the way through Q2 of this year in 2023. And those cover every crop reporting district across 8 states, including, like you said, the I states, but we also have Minnesota, Wisconsin, Ohio, and Nebraska, and northern Missouri. So really large swath of the Corn Belt. We capture great transactions on a quarterly basis over that time. So you'll occasionally find, kind of to your point, you'll find a few reports where there are sales-based analysis within a single state or within a particular region. It's rare, maybe if ever, there's been a report, this sort of comprehensive look across the region, across states, across crop reporting districts. So I think that's really the huge value add we bring to the table, because I just don't know of any other databases where you have more than 30,000 transactions that also include productivity indices and tillable acreage, for example. It's really hard to get that kind of breakdown in the way we do.
That's really critical in making sure that we're comparing like farms to like farms, right? It's not farmland is never a homogeneous asset from one farm to the next or one state from the next, certainly. But by sort of breaking things out and prorating them almost for quality and amount of income producing acres, tells you a lot more about what's going on in the market than just simply saying all land transactions.
Exactly. That's exactly right.
Well,
Yeah,
we've gotten this far into it, Aaron. I guess we should kind of get into let the people know what is driving farmland values. What are those things? And I guess I have some thoughts from the field, what I'm hearing from the folks we work with. But you wrote the report along with a few other teammates. Why don't you kick us off with what you found?
absolutely. Yeah, so I think zooming out just a little bit, we couch this. This is a study over a few years. So what we're really looking at is the growth or appreciation in farmland values on a regional basis over that time. We look at that on a per acre basis, we look at that on a tillable acre basis, and on a productivity index basis. Now, importantly, like any industry, ag business and farmland goes through cycles and goes through some seasonality. And so we try to pick that out in this report against the larger context or the broader context of the long-term appreciation we observe in farmland values. So just the market fundamentals, we're not getting more farmland. In fact, we're decreasing the amount of farmland. And at a high level, demand is going up. There's more people in the world. There's more demand for food, feed, and fiber. And so we expect to see a long-term appreciation. Now then, when we zoom in this report from 2020 to present, we see some pretty strong positive trends in appreciation, particularly at the turn of 2021, the end of 21, and the beginning of 2022. A lot of farmland turning over, a lot of strong pricing seen in the market. And then moving into late 22, we saw kind of a softening. I wouldn't say a decrease in farmland values, but we see a softening of that market as interest rates rose, and interest rates then affect farmland or farm income balance sheets coming into 2023. So, but what I really like to see in our charts is this. You can really pick out the seasonality. So just like ag production, farmers are busy in Q2 and Q3. So you often see just less transactions, lower transactions. People are only selling if they absolutely have to. Whereas Q4 and Q1 each year, we see sales really pick up in terms of volume and pricing.
Yeah, I
So
think what I keep hearing in the market, Aaron, is kind of described, you mentioned as a softening, kind of like a plateau, and maybe another way to think about it, right? We reached these historic highs on land values throughout the heartland over the last couple of years, and we're not seeing losses of that or a degradation of those gains, but really just kind of a plateau. And to your point, lots of folks, sort of hypothesizing interest rates play a role. I think they probably do. But it's important to remember that farmers are still the largest buyers of farmland, and so they've had, along with these high farmland values, some really good net income years. So if you look at farm net income over the last couple of years, it's been really strong. And so there are some sort of positive long-term, let's call them demand side things at play in terms of global demand for grain, fuel, fiber, that kind of thing. But yeah, certainly I think there are some headwinds when it comes to interest rates, and maybe we're coming down a little bit from the net farm income we saw over the last 2 years, but still positive territory, still positive from a historical standpoint when we think about inflation adjusted net farm income over time.
that's right. Yeah, we think of this, my background coming from the economics, so we think of this as regression to the mean. So the long-term trend is still really strong and positive. We expect it to continue to be. We saw a really big spike in values last year. We're just kind of coming back to that long-term average growth. So that's a really good point.
Well, let's talk about before we kind of break it out into the nuances of different states. Perhaps let's think about the idea of differences between quality of land, right? So I think you guys in the report, you take this approach of A, B, and C quality ground, and we're able to create those analyses using just basically productivity indices among different states. Iowa's going to have corn suitability rating, Illinois productivity index, Minnesota CPI, so on and so on. We're able to use those indices to create a sort of range of quality from A to B to C, A being the highest, C being the lowest. So I'm kind of curious, high level thoughts on what are the differences in trajectory of values between those different types of quality?
That's a really great question, and I think there's quite a bit of variation across states with respect to that. So, in general, if I pick the highlights, what I'd say is that Class A ground saw the steepest growth from 2020 through 2022, but it was kind of the first to soften. It was the first to plateau, as you put it. still overall gains, but it softened, whereas the Class B ground tended to continue its growth trajectory. Class C is variable across states, where certainly in some states it continues to increase. In other states, it also plateaued early, like Class A ground. But in general, I'd say Class B ground has seen the least effect from market softening coming into 2023.
That's fascinating. And that generally held up across most of the states you looked at in the Heartland report?
That's correct. Most of the states in the Heartland report would look that way. Some of the differences are going to be looking at Iowa. Iowa Class A ground, we saw really incredible sales, even at the 30,000 per acre mark in 2022. So coming into summer of 2022, Q2, Q3, the Iowa Class A ground hit that softening or plateaued earlier than other states, sort of a signal of where things were going to go as we moved into Q4 and Q1 of this year. Places like Minnesota also saw that decline or plateau in Class A ground, but didn't see that for another 6 or 9 months, lagging Iowa. Same in Illinois PI.
It's kind of fascinating. In the Midwest or the Heartland, it seems to be that the highest quality ground and the highest quality states tend to kind of be on the front edge of these trends that we see, right? So whether it's a run up or whether it's a plateau or whether it's a decline, they always seem to be kind of on the leading edge when you look at what's happening in the highest quality ground right now.
That's right. I think the other thing we're seeing, though, is a shift where a lot of people have used Iowa as the benchmark for the best ground, particularly Northwest Iowa. That's where those really high-end sales have occurred. I think as we've moved into 23, we've seen Illinois take a lot of the cake there, as particularly Central Illinois has seen some really strong sales. So we're seeing even price per tillable acre for Class A and Class B ground in Illinois kind of outpace what we've seen in Iowa. Not that it hasn't softened, but it's been a really strong state in terms of increases or appreciation in farmland values.
Well, that's a really good segue to kind of breaking out what's going on in individual states. Obviously, we don't want to go into too granularity of detail, but you kind of highlighted what's going on in Iowa, strong areas there, northwestern part of the state, Illinois, central part of the state. Talk about what's going on in some of the other states. Maybe let's start with Missouri. Kind of interested, maybe share with the audience why the northern half of Missouri. Why did we kind of bisect the state and kind of look at it just at that level?
It's a really good question, and I'll speak to Missouri, but I think there are several states as you emanate out from the I states where you get a lot more variation in farmland productivity and in the effects of regional factors on farmland productivity and values. So in Missouri, we use that northern half of the state because it kind of squarely fits into the influences of the Corn Belt on farmland values. Whereas if you get into the southeast portion of Missouri, you're really moving into the Delta region, some rice ground. It's quite a bit different in terms of the drivers of farmland values. And southwest and west Missouri tend to move into pasture ground or wheat ground, things like that. So
we hit the Ozark Mountains too, so not a whole lot of cropland going on there.
Yeah, exactly. But I think Missouri is a great state to start with because particularly you see those crop reporting districts in the north and east side of the state saw really good appreciation. But moving into 2023, we've observed quite a few really strong sales in central Missouri. So there's some really good farmland there. And we've started to see
Are you talking about kind of in that Saline County area, kind of a major seed producing area of the state?
Exactly.
Yeah.
That region, we've seen quite a few really strong sales. And again, just that the closer you are to the I states, you tend to get really strong trajectory. So your trend is pretty stable in appreciation. The more you get, the more you move away from that core farm belt region, you start to see a little more variation in those trends. So central Missouri is kind of like that. You'll get a quarter that's really strong, and then it'll kind of taper off a bit more than you might see in some of those core I states.
That's interesting. So I guess as we kind of work our way around the fringes of the reporting area, maybe we take a look at Minnesota.
Yeah, Minnesota is another really interesting one. If you look at the trends, it certainly price per acre is going to be lower than most of your other core states. But again, regional variation is a major factor there because when you start at northern Minnesota, particularly northwest Minnesota, you get great farm ground, but you have growing degree day limitations there, right? So there's just a little bit more risk in your season. And so that drags down those values a bit relative to southern Minnesota, which is right there on the border of Iowa and really, really good farmland, still has the growing degree days there.
Yeah, it's overly simplistic, right? But Northwest Minnesota, you kind of have the Red River Valley growing area, just wholly different from the southern part of the state, which looks a lot more like Iowa, slightly heavier ground, fewer growing degree days, of course. But really, you've got to take those two parts of the state, kind of separate them out.
Absolutely, and I think that's a really good point as we think about other states like Ohio or Nebraska, particularly these other states we include in the report. It is a very important consideration to make. So we do show the crop reporting district trends, growth over time, and things like that as at a state level. But the goal of the report is to show the trajectory of farmland to help people kind of understand where they can benchmark their ground. But it's always really important that we have local experts, right? To when you're valuing a specific property, you have a lot of background in this. How might you use the report, but what's going to be missing here that you would want to know on the ground?
Well, yeah, I mean, you brought up one of my favorite points, which is I mentioned it earlier, but farmland is not a homogeneous asset class, right? So if you take a look at some other real estate class, like let's say single family housing, if you've got a 3-bedroom, 2-bath house right next to another 3-bedroom, 2-bath house built the same year by the same builder, you can infer a lot of things about the value of one by looking at the other. That's not really true in farmland. You get maybe as close as possible to that in some parts of the heartland, where farms look fairly similar, but a lot can be deceiving. Is that farm tiled? Does it perhaps have irrigation if it's in a river bottoms or maybe western Nebraska? If it's in Nebraska, what natural resource district is it in? There's all kinds of things that you can begin asking questions about that are going to tell you something about farmland value that's not obvious perhaps from the naked eye. And so what I always like to say is that you cannot easily make decisions about value on a property without having some expertise. It could be your own personal expertise. Oftentimes it means turning to a local real estate agent, a local appraiser, farm manager, whatever it might be, to help walk you through that valuation process and uncover some of those, we'll call them idiosyncrasies. And so for us, I mean, I think one interesting way that we tackle that is making sure that we can drive all the way down into the individual transaction level, right? So the Heartland report is great because it summarizes, as you said, 37,000 transactions over the last few years. You'll see this great, 10,000 foot view of what's going on in the market. But one of the advantages is we do have the ability through our data platform Acres to actually drive into each one of these transactions. So again, we're summarizing them at the high level for the report, but you can go take a look at every single transaction that was involved in the report through the Acres platform. And so I guess to answer your question directly and more succinctly, what I would want to do is go look at these sales, right? So go in and say, hey, were there fixtures and improvements involved in that transaction? Or how many people were involved in the bidding on the day of that transaction, right? These things are all really important to understanding what kind of sale was that, how strong was it, and how much value or weight should I put on that when I'm thinking about the value of my property of interest. And so my way to answer your question is I would probably go to Acres. I'd start looking at the individual transactions and I'd start teasing things apart, looking at everything from satellite imagery, elevation, flood and wetland maps. These are all going to be sort of part of a holistic valuation process that goes beyond just simply saying, well, in Eastern Illinois, land is worth $10,000 per acre, right? That's far too reductive. And so you definitely want to get down to this, granular level that certainly you can accomplish with a tool like Acres.
Yeah, that's a really great example. I was asked not too long ago about how machine learning could value farmland, and
Yeah.
the example I gave is you've got two farms across the street from one another. Productivity index looks the same, everything looks the same, but one's got irrigation, the other doesn't, and that can make a multi-$1,000 difference in price per acre that you wouldn't be able to capture without getting that information from the farm or getting that information from a broker that knows intimately that farmland.
Well,
So
the other thing too going on in here, Aaron, is that with farmland, a lot of the times we have what's sometimes labeled as an emotional buyer, right? An emotional buyer is just something somebody who has an attachment to that property that is non-economic, right? So if I'm farming the field immediately adjacent to a property that comes up for auction, I know that farm might sell one time in my lifetime. And the value to me as a buyer is higher than it is for somebody who does not farm immediately adjacent to that property. And so understanding who bought that farm also tells you a lot about, is that really the market price, or was there some sort of non-market incentive for somebody to pay a higher price than otherwise would have been paid? And so, that's something that, certainly you can look at the plat map and changes to the plat map and see, okay, this guy next door ended up buying that farm that came up for sale. And it tells me something about how much weight to put into that result.
That's right. Yeah, and that brings up a really good point about the sales we included. So we really limited the sales that went into the report specifically because of this example you gave. So on one end of the spectrum, you might have a local buyer that, a next door neighbor or something that's willing to pay more for that property because of their attachment to it, how close it is to where they already farm. Likewise, at the other end of the spectrum, you may have a within family sale. So, son or a nephew or something is taking over a farm, and maybe they're able to capitalize it at a lower price per acre than they might have for a non-family member. So we took a lot of care in removing some of those outliers on the bottom end and the top end that to get a good, accurate trend or trajectory of the market in these regions by state in the report. That said, in acres, we have all of those sales. And so you can look at some indicators like that. Okay, was the neighbor the buyer of this farm in the comparable sales recorded? Or was it a family member? You can actually observe that directly in the data in acres. So there are a lot more sales, I guess, in acres than we use in the report to get good summaries across regions.
Well, Aaron, we've covered a lot of ground in terms of different states. We've certainly what's in the report itself. If I'm going to ask you to get out your crystal ball and kind of think about what might be driving land values in the next 12 to 24 months, maybe we'll do this report in another year. What do you expect to see show up on the radar or continue to be a trend when we look at this in, a year or two from now?
That's a really good question. And one, I'm thinking about other regions at this point. So looking into California report, for example, I may even break down some of the states that were in this report in a more granular way. So specifically, I'm interested in looking into Nebraska. You mentioned natural resource districts. Water availability, water regulations are a constraint there and certainly affect land values. That, depending on where the weather goes, you can see that play a major role. Even in a single year. So I'd like to dig deeper into that. But zooming out, I think in general, farm balance sheets are probably the big driver right now. So, we had very low interest rates, which really fueled that 21, 22 upward drive in farmland prices as interest rates have increased. This year, especially, what I think we're seeing, too early to say, but I think what we're seeing is that increased interest rates are affecting producers' operating costs. And so as that pressure comes in, people are going to be a little bit less hesitant to go buy, less cash buyers in the market. Again, that feeds that softening. I think we'll probably see that for another 12, 18 months. But over time, the market fundamentals are good. I don't think we're going to see a major deviation from that long-term trend in appreciation of farmland, particularly in the Corn Belt.
Excellent. Well, everything that we've discussed today, as I mentioned before, you can certainly find on the acres.com website. If you want to get more information, just simply fill out a form to contact us. We'd be happy to speak with you. Aaron, where is the best place for them to go to get the actual Heartland report?
So the report is published at landvalues.acres.com. And so you can get the general analysis there. If you want the more granular state-based analysis, you throw your email in and you'll get the full PDF emailed to you. And you can take a look there and reach out to us with questions as well. Support@acres.com. Be happy to answer questions about the report or about Acres itself.
All right, great. Well, this has been a lot of fun. Hope to do it again in the future. And thanks for your time.
Thanks, Ben. Have a good one.